I'm speaking to a lender on a car wash I'm looking to raise some money for, and he wants to meet me.
A while ago. Hi, Mike.
Hi, how are you?
Good, how are you?
Good.
Anyways, we were just talking about a property that I showed today owned by... So the is an incredible hotel in West... And I presented it to one of my clients quite some time ago. It's right next door to the... And they were putting it under renovation. They were like redoing the hotel. There was no income. So now it's already up and running. And so the agent said to me today, like, if you could bring an offer on it, we'll still sell it. It sells for extremely high prices. So it's in the $150, $160 million range.
How many keys?
I don't remember. I have to pull up that back. I worked on this probably over
Send it to me. I have a hot buyer for...
It's not, the numbers aren't going to make sense. He sells it at it's about the land and where it is. It's...
Well, what's the price per key? Let's see what the price per key is.
Price per key, it was probably like $1 million a key or something really high, and it's not like a state-of-the-art hotel, which is why my guy didn't move in on it. I'll send it to you. I'll send you over the CoStar report on it so you can kind of see. Numbers won't make sense. The wants to buy it. So the came in at 140 because they wanted 2 residences next door. They rejected the 140. They believe that the will eventually come up and they're going to need it over the long term. So it's definitely something that eventually is going to be a play. But for right now, it's unflagged. It's like 2 acres on the water. It's beautiful. I'll send it over to you. Mike, what's with the attire today? You're all dressed up. Anything special?
Yeah, I had a big meeting at the office, and I had about 25 people here, so it was a great meeting.
Nice.
A lot of deals.
Leva, do you know on question for owners that if any of them are in that salary and wages? I know they have the management fee that I'm sure is going to them. But the 721,000 in salary and wages, is that any of them?
I'll ask.
They're at 50% net margins, net income.
That's tough.
Not a lot of repairs and maintenance listed. They may have taken it out of the P&L and not included it. But considering that it's a new build, there's not a lot here for repair and maintenance. Again, it easily could be not just pulled out of the P&L. As a one-time expense. It was operating in 21, but they show 0 for utilities. A little strange.
Is this guy getting on, or?
Yeah, he's jumping on right now. I just called him. He's coming on right now, and here he is.
Guys, I'm sorry about my lack of timeliness here. I'm juggling a family vacation in Tennessee, so I appreciate you guys being so generous with your time.
Thanks, Joe. I want to introduce you to Michael Steinberg. He is the buyer for the gas station, and I'm kind of like, Joe, I'll let you guys kind of take over and let's discuss some numbers.
Perfect. It's nice to meet you, Michael. Thank you for taking the time.
Of course. Thank you.
And the illustrious Brian Dunn is with us. The genius.
Oh, nice to meet you as well.
Hi, Brian. Okay, perfect. So I'm happy to answer any questions that you have. In essence, I can tell you what I know, and I can tell you about where lending generally is. Leva shared with me some basic parameters to the transaction, and I'm happy to kind of tell you what I know, or I'm happy to kind of just launch into answer any questions that you may have. What do you prefer?
I would love to hear about, what you've done and what kind of deals you do, because we do a lot of car washes.
Perfect. Okay, so I do a lot of car washes also. I'm a broker, commercial broker, so I pretty much do all asset types across the continental United States. My focus is on commercial and some multifamily. I happen in the last year to have done a variety of different car washes. I take 5 brands stuff as well more recently. I happen to know car wash pretty well. There aren't that many car washes and I happen to office 2 doors down. So and I'm a customer, so
nice.
They from all of my experience, they're good people. They do a good product, and they always seem to be busy. So my expertise is local, national, and regional relationships on the lending side. So typically speaking, I can tell you about where we're seeing rates and terms for a transaction like this, and what you can expect, and what we try to aim for, and where I think we'll settle. So a typical structure for a commercial transaction like this, if you were just buying the real estate, would be about 65% loan to value, 65 to 70% loan to value. It's going to be based on their NOI, their net operating income. We take the last couple of years, some basic information on you. The merit of this transaction is really based on the income of the car wash, and that's it. Commercial rates and terms are going to be about 25 years amortization, rates in the mid to low 7% range on a 5-year loan or a 7-year loan, depending on how many years the lease is. We can go even longer. Yeah, that's kind of option A. Option B would be what I call an owner-occupied loan. That would be where we're financing the acquisition of the business and the real estate. Typically speaking, that can go up to 80, sometimes 90%. Finding the right lender who is willing to do that sort of business, because in the commercial world, car washes are considered specialty use. So, for example, I'm financing a business and a real estate transaction for an attorney in Hollywood, Florida, and because it's not considered a special purpose type use of business, I've got pretty good reception from lenders. This would be special use. That being said, I know which lenders are doing special use and what their terms are, and I'm pretty confident that mid-sevens, 25-year AM is pretty achievable. I think the fact that it's in a great location, they've been running their businesses well for the last 3 years, and it's got very good frontage on one of the best roads on North Federal. I think that it's got all of those things going for it. I haven't personally seen any of the financials. I have not been privy to any of that. I don't suppose there's a lot of hair. And as it relates to one thing lenders do like to know is who's buying it, right? Do they have experience in buying car washes? Is this, it's not just it's not like a multi-family building where there are 10 people living in there and they have annual leases and you kind of set it and forget it until a lease needs to be signed or a boiler needs to be replaced. Car washes is a real business. It's much more hands-on. So they want to know that whoever's making this acquisition is relatively low risk. They know what they're doing. But from what I hear from you, Mike, it sounds like this is your bread and butter.
Yeah. I'm in the business. I have a piece of a bunch of locations in New York. I also have my own two of my own locations as mine, and then I have a piece of about 9 other locations. And I've sold over 100 locations as a broker. I've probably done a couple $100 million in car washes in the last couple of years.
Wow. Okay.
Yeah, so
I think we're going to struggle here.
Yeah, and I have a lot. Like I raised a lot of money, and I'd rather just try to leverage it than buy it all cash.
Right. From my understanding, the seller is willing to do seller financing. My typical experience with sellers who are willing to do seller financing is that they're usually out of touch with where interest rates are and wanting to offer it, not to lose out on the deal, but not really offering anything that's worthwhile for a client to actually take. So 11% financing on a 5-year amortization or even a 15-year amortization is going to be extremely expensive for you. And just from running some basic numbers, even if we were to get a loan of $4.5 million for you on a 25-year amortization on a 5-year loan at 7.5%, doing the math, comparing apples to apples, over the course of 5 years, I would save you $1 million worth of principal and interest, about $200,000 a year. So obviously, it's quite significant. And what I'm known for in my brokerage capital is that we really white glove the financing process for you. So you look like a very busy chap, Michael, doing a lot of stuff. And we really sort of take it from A to Z. There's very little documentation we need from you. A lot of it's handled by title attorneys, appraisers, and that's all handled by our office. And any paperwork from you is very limited. And everything else I can probably get from Liba, the broker, and figure out that way. So our financing process is typically 30 to 45 days.
So what kind of loans do you do SBA? Like how do you?
Yes. Yeah. So we can do SBA. I think for this purpose, you'd be better off with traditional bank financing. From my understanding, you are going to be putting in a decent down payment for this acquisition. So if we're talking about, we can do SBA. SBA is more expensive. SBA is more expensive. They use a blended rate. That's an absolute possibility, yeah.
Okay. And So SBA, you do SBA. How do
Yeah,
you?
I mean, the truth is, Michael, sorry, I didn't mean to cut you off, but as a broker, my job would be to go to a variety of different lenders in the market and come back to you with a loan matrix of different options and availabilities to you, and then you and I can make a best decision as to what makes the most sense to proceed with. There might be SBA. You might say, hey, listen, I want to put in as little money as possible. I don't mind paying the high rate in SBA, even though it's going to take a little bit longer. I'd like it, right? And it's much more fee heavy, but I don't mind. So some people say, no, I don't want to pay heavy fees. I don't want this to take a long time. I have some spare cash. I want to sink into it. I've got partners. I want to just finance something that makes sense. And I prefer balance sheet local lender debt. And there are some people that say, I don't want to deal with that at all. It's a headache. I want to deal with short-term bridge financing. The approval process is much quicker. Okay, the interest rate is much higher, but that's just, we can just do this quickly and take it on. That's definitely a possibility. Or you might say, no, I don't believe in financing. I want to do this whole thing in cash. So we've done all of the above. It really depends on what you are feeding, Michael, and what your business plan is.
Now, do you think this one's going to appraise?
So I think the building will appraise because there are good comps in the area. I think it's about $6.5 million. Is that have I understood that correctly?
Yeah, they just did an appraisal. They just refinanced the property, so it came in somewhere between 6 and 6.5. I have not requested it yet, but if we need it, we can request that, and it's very current. It was done by a bank just up the street from me.
Perfect. So yeah, we can use that appraisal as proof. We might be able to order our own appraisals. A lot of lenders will require that. So if the question is, how is the business being valued? That's where it's a little bit more dicey. But it depends how much money you're looking for, Michael. Is this if the whole acquisition is $10.5 million, how much money are you willing to put down?
I would try to put down at least $2 to $3 million if I could. Okay,
so that would be
20 to 30%.
Right. Yeah. So you would need $7 to $8 million then.
Yeah. So if it's not appraising at it depends how you. That's why I'm asking. If you're going to do it a 504 or how you would structure it.
So again, SBA financing is different. So have you done SBA financing before, Michael?
I've done a ton of them on the broker side. I haven't done any on the buy side.
Understood. Okay, so based on your experience, you probably know that the financing process is nearer 60 to 90 days. Their rates are higher and they're very fee heavy. So your loan will be, the benefit is that the LTV is higher. You can get up to 90%. But a lot of that last 5 or 10% is where the SBA fees have been preloaded into the balance sheet. So your acquisition might only be, let's say, 6.5 or 7 million, but it will be 7.5 million loan they give you because they're baking in their fees. It's a good thing and a bad thing. It depends on the person. Again, if you need the financing and you don't want to put a lot of money in yourself, SBA is definitely the way to go. I'm happy to come back with a variety of different options for you. That makes sense. Let me just ask you, Michael, just conceptually so I understand. Is there a world where you can put $5-6 million into this acquisition?
No, I wouldn't do it.
Okay, so okay, fine.
I feel like I'm overpaying for it now. I want to do it for a lot of reasons. I love that I have someone that's willing to be there every single day and live there. That's why I'll overpay for it a little bit. He's my family member, but I really want to try to leverage it. I feel like the debt service can be covered if, I ran some numbers with Brian. The numbers that we ran yesterday, could we just go over those?
Sure.
With the down payment and 25 years over.
Depending on what you need on it, on an $8 million loan at 7.5% is $56,000 a month, $8 million flat. And that's, right now the offer, they want $10.5 million, but if they're not doing seller financing, that $10.5 million is going to come down to something, whether it be 10 million or 9.8 or whatever the number is, but it'll be a number under the 10.5. So
can I just interrupt for a second, Brian? So the client is willing to offer 7.5% in seller financing, or it's going to
No. I'm just running some math. I'm just running the calculations on it. No, the seller financing offer was what you said it was. It's out of control. At 11, there's been no pushback on it, but that is their ask on the seller financing.
yeah, that would not work, and even it wouldn't even debt.
Yeah, it's, 11's crazy.
Running the math on an $8 million loan, you're talking a monthly payment of at 7.5% would be over on a 25-year amortization would be about $56,000.
Yeah, I've got it coming around about near 59,000, but again, it's for splitting hairs. It's going to be around about that. So, if your building is the NOI is it's a $1.1 million NOI.
Well, it's 1.1 not backing out the rent, right? So it's that's the EBITDA is 1.1.
Okay, so let's back out the rent for a second. So would be 1.35. Is that right?
No.
The 1.1 includes zero rent.
Right.
1.1 is
it was added back in the P&L sheet. Yeah, you're right, Brian. It's 1.1.
Okay, so let's say so 1.35 times.
No, not 1.35. You're going the wrong way.
No, I'm doing a DSCR calculation. Sorry, you're right. It is 1.1.
Oh, I'm sorry. Yeah.
And then I'm just doing a quick DSCR calculation. Well, yeah, 0.64. Yeah, it wouldn't work. It wouldn't work.
It's gonna work. I mean, just doing a quick math, it'll work. I think you're gonna be right around 7 million. At 7 million, 7.5% gives you a annual of about 615,000. And assuming that the 1.1 million minus 250 on rent, that's what they charge themselves. That is below market, but that's what they've been using themselves. Brings you down to 850 or so, and the 600 would give you over 1.3.
Yeah, those numbers make sense. So say 7 million, as you said.
7 million is a $52,000 monthly payment if you want 7.
Yeah. So then times that by 12 equals that divided by 1.35. Sorry, divided by. So I got the rest there. Divided by 1,100,000. So I'm just doing back of the napkin here. Yeah, it should work better. So I think the expectation is going to be nearer 7 million in order for this to work. What I would say is that I would need to see the financials in order to do a full calculation on this and just come up with basically to kind of just educate you guys. When it comes to these lenders, they're working on a debt service coverage ratio, right? Typically for special use for commercial, they use a 1.35 times debt service cover ratio. So whatever the income gives off, we have to make sure that the loan, that the debt service isn't exceeding a 1.35% ratio. Whatever that's a sweet spot number. It's really just it's very arbitrary. So whenever we get that number in and we can just prove that out on paper, that's going to be the number that we're going to be working off, basically.
Now,
so,
question for you there. Let's just round off of 1.1 million as the EBITDA, including the rent. Do you need to back out market rent? Because obviously market rent on a $6 million building is, I don't know, 480 or whatever the number is going to end up being. Or do you not have to because you're owning the building and the property together? So that is part of the...
It's a great question you're asking, Brian. Yeah, so lenders look at this from two ways. They either look at it from the rent, which you would charge yourself, which would just be a wash, and they would base the loan based on the rent that you're receiving. Or number two is that they're basing it purely on the NOI. Usually they take some form of blend and they want to make sure it makes sense on both ways. The best and easiest way is for you to have a holding company and the building and the business have a separate LLC, and you have a rental agreement, right? A triple net rental agreement to yourself. That's really the best way to do it. If you guys are able to do that and make it market rent, would that be something you guys are able to do?
So you're not going to make it market rent though on the math. On a $6 million property, assuming that's the value of it, a market rent at even at a 6 cap is $360,000 now, and you probably couldn't go lower. It would make your math a lot tougher.
So what I'm hearing you saying is if you go off market rent in the area, the deal doesn't make sense to you guys.
I'm not so sure. They just on the P&L, they have $250,000 in rent that they're paying themselves, and then adding that back.
Right, that's definitely too low for the area.
That's what. Well, on 6 million on a 6 cap is 360.
6 million val.
No, if the land is worth 6 million on there, and you wanted to do a 6 cap on the rent on 6 million, I think you're probably talking 360,000 as the rent. right?
I haven't done the math on that, but I take your word. I'll take your word for it. Let me ask you: market rent market rent in that location is what?
I actually do not run the numbers for the specialty use, so I don't know. I'd have to pull the numbers.
I mean, that appraisal lever that your client has will be very telling, because that's going to tell us what the market rent is going to be. I mean, we can run that analysis internally, but if we get a hold of that appraisal, that will be very, very helpful, because then we'll be able to see directly fresh from an appraisal's perspective where this is going to come in, because lenders are going to underwrite to market rent, right? So if market rents are $35 a square foot or $40 a square foot, that's what they're going to base it at. What I think the best next stage is that I don't want to talk in potentials. I want to talk in absolutes with you guys. So if you, with your permission, if you were to share the financials with me, my team can underwrite this in a day and a half internally and be able to spit out a real analysis based on the information that we've received, as well as as well as be able to go forward in a direction that you can actually execute on. Because if the numbers aren't there and we can't make it work, then that's going to in turn inform about what the type of offer that you're going to end up settling on.
No, that's fine to see where it lands. I mean, you basically just need the P&Ls the last 3 years.
Correct. P&L the last 3 years. That's totally enough for us. We'll underwrite it. We know the location. We know everything else. Eventually, before we take, that's going to be enough for our analysis. As just before we take it out to market, Michael, we will need some like your resume bio on you. Some information on you. The lender's going to want to know that, and then we can take it out to market. Everything is done, confidentially and privately with our team and the lender.
So next steps, we'll send you the financials and let us know what you think.
Sounds good to me. Liba, if you can get a hold of that appraisal, that would be huge.
Yeah, I just messaged the owner, so hopefully they're pretty responsive. I should get it shortly. So I'll send it over.
Do you guys have any further questions for me that I can help provide clarity for you guys on?
No, I think we should talk about we should have the financials sent to you. You take a look and then you get back to us. And then I can, the bio and everything, that's easy.
Perfect. That works for me. All right.
Excellent.
Well, I really appreciate the time, guys. Thank you very much for hopping on. Liba, thank you for facilitating as always. And we'll be in touch. I'll wait to receive those financials.
Thank you so much.
Thank you.
Take care.
Bye.
Bye.